thank you for joining us today. Our goal will be furtherly explained by Solène, but as from LPA, our goal is always to bring, to support the local startup ecosystem, to bring VCs to the table, to the same table of startups, to let them understand better how to become better in what they do and to become better in finding the funding that they seek. Well, you probably have the chance to introduce yourself individually, but thank you, Solène, Ken, Alain, Yannick, and Alexander for joining us today. Some of you are part, well, actually all of you are part of our VC club. And this is a recent club of the LPA that we want really to activate and motivate with other initiatives. There are several plans. There were recent discussions on working more. I think this club will be very critical in that field. And I would also like to mention that membership to the LPA is also open to startups. We do have several startups operating, most of them in the financial sector, that are members of the association. So we are an open association. Check our membership options to see if it can convene you. A last word to thank Security Made in Luxembourg for the invitation to have us on board. There was a pitching session yesterday, and today we bring the VC investors from the LPA community to speak and advise on startups. I will leave the floor to Solène, not before saying that participants can interact with all the speakers and the other attendees through the chat function on your right screen. So please use this chat session, not the event. The event will be global. Maybe we will not follow that much, but focus on the session, please. You can write your comments or your questions there, and then they will be addressed. Last but not the least, for those interested in more about private equity and venture capital in Luxembourg, we invite you to check our other events taking place also in Hopin, the LPA Insights, which will take place on November 25th, and which is open to all the community. So have a look at lpa.lu and you will get all the information you need. So I pass the floor to Solène. Thank you.
Thank you very much. Okay, good morning, everyone. To be here today with Yannick, Alain, Alexander, and Ken to discuss what they, and more generally, investors are expecting from startups, what their priorities are in cyber, and how to prepare your startup for investment. I quickly present myself. So I'm Solène Idercom. I'm an advisor and non-executive director in the financial industry and a proud member of the LPA. As an introduction, and considering that the audience comes from various regions around the globe, I wanted to highlight some background information about Luxembourg and Security Made in Luxembourg, and maybe you already have all those elements in mind. I've been living in Luxembourg since now 12 years, and I must admit that this country has built a practical and business-oriented ecosystem where it's a very interesting place to start a new business. And we have seen these last 10 years the emergence of key players such as incubators or associations, and strong partnerships between big players such as consulting firms and small players such as startup. And as a former startupper, I benefited from all those structure, and I must admit that a little bureaucracy and support from the government are really strong. Another element that you should bear in mind is Luxembourg is a very small country, you know this, but it means that it's really less complicated and it's also exceptionally cosmopolite, and all those elements converge. And it means that European startups, such as I would just mention two of them, Satispay, which is based in Italy initially, but has its European headquarters in Luxembourg, or Tokeny, which is originally from France, has also settled its European headquarters in Luxembourg. So I'm glad that Security Made in Luxembourg proposed LPA to participate to this Cybersecurity Week. And I'm very honored to be part of this panel as a moderator. I'll finish this introduction by quoting just a few figures about SMIL. And sorry if you already have them in mind. SMIL, it represents 304 companies in this ecosystem. 22% are startups. And 46% of the companies have less than 5 years old. Okay, so now I will close this introduction and let's start this panel. Around this virtual table, we have 4 VCs, all member of the LPA, active and funding companies worldwide. So I will let them introduce themselves, and maybe we could start with Yannick. Can you please introduce yourself and present quickly Mangrove Capital?
Yannick, you are muted.
Yannick, you're on mute. So maybe we should continue with Ken, and Yannick, if you solve your issue, we can continue afterwards with you. Ken? Can you unmute? We have an issue.
There we go. Can you hear me?
Ken. Yes, it's perfect.
Okay.
Ken, you're frozen. Alexander.
Yes. Okay. So,
let's continue with you.
US, Europe.
So who starts?
Alexander, you are muted as well.
Question is, can you manage?
Can you hear me? Can you hear me now?
Yes, we hear you, Ken. Yes.
You can hear me now. Okay. All right. Sorry about that. I'm not sure if that was my end or what the issue was. Yeah. So I'm Ken Pensamonte. I'm with Paladin Capital. We're a U.S. and European focused venture capital firm focused exclusively on the cyber sector. And we have a broad definition of cyber that we can get into later as to how we see the market. But we've been investing in security since 2002, so a long while before cybersecurity really was even a word. And our first security-related fund was a broad fund in which digital and IT security is one piece of what we invested in. Over time, we've become more exclusively focused just in and around digital and IT security, what people now call cybersecurity. We're a little bit newer to Europe. We originated in the US. We've been here in Europe a little over 5 years. We have offices in Luxembourg and London, where I split my time. And yeah, I've been with Paladin a long while. I joined not long after we raised our first security fund in 2003. So spent a while in Washington, D.C. and now have been here in Europe since 2015. Yeah, we're an earlier stage venture firm, so we usually invest in seed and Series A companies, and we'll usually be very active, take board seats, try to bring as much of our network and relationships and experience to the table. And yeah, we have a wide range of companies that we invest in. Yeah, we've any type of IT-related security, from cloud to IoT to to application development security, a huge range. And so yeah, that's a quick background on us.
Thank you very much, Ken. Alexander, can we continue with?
Happy to do so. My name is Alexander Kachenko. I am a managing partner and founder of 2BLU. It's an early stage fund originally set up and located in Luxembourg. The fund was set up in 2014. And in 6 years, we've invested 20 million euro in about 20 startups in different companies. The focus of the fund is platform solutions, artificial intelligence, and blockchain. We typically invest very early, so pre-seed, seed, and post-seed levels. We closely work with super angels, as we call them. So we go into syndications at an angel level and then help fund companies to A or sometimes B round. We invest across geographies. So we have quite a few investments in the UK, some in Europe, and quite a few in the Singapore or around the Southeast Asia. I've lived in Luxembourg for over 20 years. I can support, Solène, your view that Luxembourg is a very interesting place to locate startups, especially if you're working in the fintech area. More specifically, if for cybersecurity, it may be an interesting place to start operations if you are one way or another working in the area of blockchain or indeed fintech. So security is here. We ourselves are looking very much involved into the blockchain ecosystem. Therefore, we are actively looking at the startups that are in the cybersecurity that are focusing on the security of the digital assets.
Alexander. Yannick, is it working? I guess yes now. Can we continue with you?
Can you hear me?
Okay. Yes.
Very cool. Well, thanks for the intro and thanks for the invite, LPA. So Mangrove, let me give you like a very quick overview. We are one of the oldest venture firms in Europe. We have been around for 20 years, and we're investing out of our fifth fund. And I think there are three things that characterize us. Number one, over Europe and Israel. That's what we call Greater Europe. We don't have any geographical focus within these borders. Number two, it's even though we have relatively large funds, we have, we only take a few bets, have very concentrated funds, and we try to be relatively bold in these bets. And this made us successful over the past. So drove large outcomes such as the seed funding of Wix, Skype, WalkMe, or K-Health, among others. And I think interesting for this session is we're generalist VC, but we have like some areas of conviction, such as healthcare, silver tech, and something also that we call online toxicity. And in that category, we put cybersecurity. So we have a broad definition, but we will get back to that later.
Alain, can we continue with you?
Yeah. Hello, so I'm Alain Roderman, founding and managing partner at Expand Capital. So we are a venture capital firm based in Luxembourg, and we are operating two strategies. We have two funds. One has a local focus, so we back digital companies that have a foot in Luxembourg. So they could be incorporated in South Africa or anywhere in the world, but they should operate. They must operate a team in Luxembourg. So this is backed by local corporate partners and the Ministry of Economy of Luxembourg. So we have. So the purpose of this fund is to attract companies in Luxembourg or fund companies that were born in Luxembourg. Second strategy is with another fund, Expand One, which invests in companies that have a massive transformative purpose, addressing at least one of the UN SDGs. So it's not exactly an impact fund because we want to make profit out of this investment, but it's definitely has to target sustainable goals. And we operate everywhere with this fund, but mainly focusing on Europe, Israel, and the USA. And with both strategies, all the company we back must have a massive a minimum viable product. But we can invest up to Series C. We receive something like 2,500 deals a year. So this is about the company. About myself, I've been in VC for 23 years and I backed several dozens of companies. I had 3 IPOs, so which is quite interesting, more than the trade sales with big corporations, I think. And I had one exit in cybersecurity in the past with a French company named Cosmos. But with the existing strategy, we are quite generalist, investing in digital company in general, and cybersecurity is one of the core focuses.
Thank you very much, Alain. I guess all of you have already answered to the second question I had in mind regarding your investment philosophy, investment status. Maybe you wanted just to close this introduction to mention some of your companies you invested in and successful exits.
So I'm happy to take this one. I didn't cover it yet, actually. Can you hear me? Awesome. So I think just for the audience here, it's probably interesting to understand where we invest and which stage. Alain touched base on this, saying that he invested from early to series up to Series C. We are a bit more of, let's say, stage focused, meaning we essentially do a third pre-seed, pre-launch, a third seed, and a third what we call early A, meaning $500,000 up to 5. But probably what entrepreneurs to understand is it's important. We're really looking, as I said, we have relatively large funds, so 200 million funds. So we're really looking. Each investment ideally can return this multiple times, and we are there to actually help entrepreneurs.
Thank you. Ken, Alexander, do you wanted to add some elements regarding your investment philosophy, or mention some companies you invested in or successful exits?
We are mainly focused on the platform AI and blockchain, as I mentioned. In the platform solutions, for example, we have 3 GDS platform in the e-ticketing space, one in the US, one in Singapore, and one in Russia. So we're quite focused on that particular space. We have kind of niches around e-mobility, also platform solutions. And in the artificial intelligence, we are focused also on the niches. So aggregation of the large data, for example, customer feedback, and providing it instantly on the in the easier to read forms. So all of our platform solutions or AI solutions are niche players. So what we do, we like big problems, but we also like niche players who can actually dominate a very, very small vertical.
Okay. Ken? Shall we continue, or you wanted to? I guess Ken is frozen.
Yeah.
He's not moving. Okay, so I'll continue with the second part of our panel discussion. Okay, so thank you for this clarification. When we prepared this panel, Alain, you mentioned a figure that struck me. You told us that 20% startups get VC funding. So why 80% never get funded by VCs? And of course, venture funding is not the only possibility, and each VC has its own requirements and strategy. But what are for you the minimum requirements to get funded on one side, and what are for you the showstopper on the other? And what do you expect to see from companies when you first meet them? And actually, what to maximize to get interest from you VCs? So to summarize, what are your must-haves and no-goes in a nutshell?
So we're starting.
Alain.
Okay. So it's a long story. So I will try to make it short. There are a number of things that are absolutely necessary, but you know that most of the VCs have a good ability to identify the showstoppers first. So for sure, when we meet companies that sent their business plan, or we receive a business plan that was not requested, first things we see that could it fit with the strategy of the fund in terms of stage, in terms of focus, and are there big showstoppers? If it fits with the fund, this is the first things we do. After that, we go into the details to see if those companies can make it because they are good. It's a good team. You have a big market. There is traction with the product if they are already on the market. That kind of things. But maybe I think that most of us share the same type of criteria. But I would like if you agree, just start to focus and maybe say a word about the no-goes. The no-goes, and this is one of the main reasons why entrepreneurs don't raise money, and 80% of the startups never manage to raise money, probably because there are no-goes. So I would say a few of them that are quite obvious. So we never invest in subsidiaries of a big corporation. So companies should be in the hands of the managers. Just because we invest at so early stage, there is almost no asset in the company. The only assets that are important are the team. So we put the money on the head of 1 or 2 or 3 people in the team. So those guys should be aligned with us. And in order to be aligned with us, they should own the company so that we can have a kind of good shareholders agreement, an alignment of interest so that we can be sure that even we are not managing the company, because managers do manage the companies, they are aligned with our interests. This is a very, very big point. Second is that when there are already investors in the company, if those investors are corporate investors, they should not have, or it's just impossible for us to invest if they do have preemption rights. It means that a corporate comes on board with 25% and the company is becoming a big success. So for strategic reasons, this corporate decides, and it doesn't tell us that at the beginning, to buy every time somebody sells a share, he preempts. And he preempting, and he goes from 25, 27, 29, 30, and go to 51%, which is the beginning of the disaster in terms of value of the company, and liquidity for the future. So it happened to me several times, few times, to our funds, few times, and it's really very annoying. More than that, it's on our side, we decided not to invest anymore if there is a corporate investor with preemption rights. And I would just finish on the third reason that are showstoppers is that investing on people we cannot trust. So we meet sometimes entrepreneurs who lie, so they hide things that we discover when we do when we do the due diligence and we try to discuss about the reps and warranties. And these 2 reps and warranties has only one purpose, is to make sure that the entrepreneurs, the founders said everything. And they cannot lie because there is a warranty if they lie. So, and we discover sometimes that they lied. And it happened to me several times. I remember I broke a deal. It was 1 hour before the closing because they disclosed somebody that was absolutely crazy a few minutes before the closing. So make sure, if you want to be funded, because it's a huge effort for you founders of companies, that you don't lie, you tell everything, because it's going to be discovered after a while. So I will let the others speak because there are so many things to say.
And but quickly before I give the voice to somebody else, for the must-haves, do you have 1 or 2 in mind?
Oh yeah, so must-haves. So for us, this is a big ambition. I understand Alexander speaking about niche market, but for most of the VCs, I think even for Alexander, if there is a big ambition, this is absolutely necessary, because if we target a goal which is very high, very ambitious, maybe even if we fail, we will sometimes, and most of the time we fail, but they will founders and companies will manage to get at a lower level. But if we target very low, we'll go nowhere. So ambition is absolutely key. So it means that it is the team, and the team. The team is absolutely key. Other things are less important. A second, I'm sorry, just I will put a second criteria. This is the capital gain we can make. So the deal is absolutely key. You have to make sure, you founders, that you give room to VCs in order for them to meet their strategy, so to make a capital gain. So very, very high valuation is a showstopper. Whatever we say about the quality of the company and the risk behind that, we have to return money to our investors with a certain capital gain, with a certain multiple. So we need to have rooms, and we can speak later about the mathematics around that.
In addition to what Alain says, Ken, do you have something to add? Of course, yes, I guess.
Yes.
Ken?
You seem to be frozen, Ken, again.
Am I frozen?
We don't hear you.
Can you hear me now?
No, okay. Now it's
okay.
Okay, now it's
Yes.
okay. Good. Well, we seem to have lost our mind. Let me give some thoughts around that as well. First of all, yeah, agree with all of those points from Alain. I think we think about things very similarly. On the positive side, let me start with some of the things that we do look for and our positives. I think first of all is our quality teams. Seems pretty obvious, but a lot of times people start with the product or technology or market. We typically will start with the team, and is it a team that we're excited about, that we think has the right background and experience, has the right vision, has the right passion and the right plan going forward. So I would say we oftentimes will take much higher risk for teams that are proven or that we have really high confidence in right off the bat. So that's for us, and I think probably for most, that's maybe the biggest factor that we look at. Next is a big market. You could have some great technology, a great business plan, but if you're going after a very limited size market, it's often hard to make venture capital return. And I think we all think about things that way. And the market needs to be big enough, it needs to be dynamic enough, exciting enough, and there needs to be an opportunity, a market demand that that is going to allow that company to grow, and for us to hopefully all collectively, investors, the other investors in the company and management, all to be very successful. So that would be a second piece. And then third would be the technology itself. How difficult to replicate, how differentiated is it? Is it something that's oftentimes in cybersecurity for sure, markets can be reasonably crowded. So very rarely do you find a company that is the only company doing what it's doing. There typically are others trying to do at least something similar. And is this technology with the specific company we're looking at, is it differentiated? Is it would it be difficult for others to try to replicate? I mean, at the end of the day, most of our companies are sold to larger strategic buyers, and they have to make build or buy decisions. And they if they are able to build it themselves very easily, and it's not very complex, sometimes the valuation, or even just the desire to make the acquisition would be much less. So I think those are three of the big positive sense. Negative, yeah, I would agree with Alain in terms of all of the showstoppers. One of the other things, a couple of the other things we look at are, how knowledgeable, how how much research have the companies done relative to us as a venture firm, and relative to their own market? Do they know their competitors? Do they know us and our competitors? Are they ready for a venture round, and have they done that homework? I think I'm always surprised how many companies I meet have not. They have a really great technology. They focused on the building a product, but they don't know what the market demand is. They don't know who their competitors are. They're looking to raise venture capital, but haven't really done the homework as to who the venture capitalists are, who might be the best fit for them. So, it becomes pretty obvious, I think, very quickly if companies have done that homework, and if they haven't, that's a pretty big sign to us that they're not ready, at least at that point, to raise money. The other thing that we look for is this, the vision, would the vision and the plan of the company be consistent with venture capital money? A lot of companies, we talked about the 80-20, a lot of are just not, they're good. That doesn't mean they couldn't be successful businesses, but they are, I'll call them, more of a lifestyle business, where you maybe get the company to slightly positive, cash flow positive. It grows at a small rate, and it's a nice business, but there isn't that desire or plan to grow the business and scale it fast enough, to be really, to meet the requirements and hit the hurdles of venture capital coming into the business. And if that's not there, that's a big red flag for us up front.
Thank you, Ken. Yannick, Alexander, do you have additional things to mention?
Looks like we still don't have Selene. Does anybody else have thoughts around green lights and red lights?
I can hear you, Selene.
We can see and hear Selene. Ken.
Oh, okay. I just can't.
Alex, do you want to go?
I can't see her for some minute.
Go ahead, Yannick.
Super. Thanks. I have 2 points, I guess. One is a bit more contrarian regarding market size, and I would like to add 1 point to what the others just said. So regarding market size, our view is a bit, it's one of the most ambiguous terms probably in this industry. So I would split it into two. It's like you have existing big markets, and that's obviously the dream, and you go after them, and you are confident that your differentiation, as Ken said, that you can basically take it over. So that's one approach. The other approach is, and it's a bit harder to convey the message. Hey, I identified this massive pain point, and we think actually that this market will take off, relatively soon. So it's really an aspect around timing. And two simple examples from our portfolio: Skype, there was an existing market people were calling, right? Which was very expensive, especially in Europe. On the other hand, Wix, having an online presence in 2006 wasn't really necessary yet. But there was a big belief that the internet would continue to grow and online business. So that's a little bit. So, but what I want to say with that is 1 point I think we are really looking at is storytelling. What I mean by that is that the ability to get people excited about your idea, and that's towards employees, the press, PR, but also towards future investors. Because one, we can, the venture capital game, the nature of it is that most companies need to raise multiple follow-on rounds. And we can put you in touch and prepare you to raise that money, but we can't be in the room with you within other investors. So that's something that's extremely hard, and it's that we're really looking for in founders, this ability and the willingness to be able to convey a good story.
Thank you, Yannick. Alexander, you're on mute. Okay, we have lost Alexander. I'm the only one? No, you're there? Oh, you're there. Okay.
I'm actually here. Let me connect my camera.
It's better.
It's actually quite interesting. First, maybe I answer Alain, but a little bit, I think there was an answer in Ken's and in Yannick's question. When I was speaking about the niches, I was not necessarily speaking about the small markets. Obviously, like everybody, and preparing the today's session, I did put market number 2, so team number 1, but big market is obviously number 2. If there is no market, it's very difficult to see how we can make money on it. However, when I speak about the niche, is what Ken addressed as a small market in a crowded space. So what we're looking for is the vertical or the positioning of the team that would allow them to dominate a particular sector. For example, a small example. When we started to invest in the e-ticketing space, Ticketmaster was, the big thing. And this a little bit relates to what Yannick is saying. However, there was already one startup in the UK, and then just the second one in Russia that saw a possibility of moving it to the next level, i.e. creating platforms that connect organizers directly to the distributor. So you don't have a distributor, you have online platforms that basically like connectors that allow you to connect. And that was a niche that we saw, and we thought that those players could actually dominate, because at that time it didn't exist, but it's also not the total e-ticketing market. It's just a small subset of it. So that's what I meant about the niche. What is also interesting in Yannick's discussion is that I have a very good anecdote about story, or story first. This is actually one that we're looking for, story. And it's connected to the beginning of the 90s. I worked at a radio station which was started by an American founder. The name of the company was actually Story First Communications, and it comes from a very simple anecdote. He came to Russia after the fall of the Soviet Union, just at the border of it, and he had a big dream. He wanted to build an entertainment radio and television company. He went back to the States. Remember, this is 91 or something like this. And he started to speak about his big vision with the investors. And what he had heard was, what's the story? Story first. And he heard it so many times that he actually decided to call his company Story First Communications. What is interesting about this company is that it became one of the largest Russian media groups. At the top of their valuation, it was 5 billion. But that just shows you the importance of the story. And here I totally agree with Yannick that this is, at least for us, this is a very, very important factor. Just to add to the number of the kind of things that would be a showstopper for us is a transactional mind, i.e. entrepreneurs who do not understand that it takes two to tango, i.e. that they are interests of the other people in the company, such as venture capitalists, to make money, etc., and who are very transactional in their approach. I think everyone would feel it immediately, and for us it would be a showstopper, because that means that it would be very difficult for us to build a sustainable business or sustainable kind of relationship with this founder. But all the rest, dishonesty, focus on trends, etc., many things that were said, I'd support.
Alexander. Okay, we are a bit running out of time, so I will go directly to the second part of this discussion. It's to focus a little bit on cybersecurity. Now, I think that everyone has understood the do's and don'ts. Since cybersecurity is really a booming sector, VCs are keen on following what's going on in booming sectors. And we know that some VCs like Paladin or Axel have a strong bias in that type of investment. I have one figure in mind. Correct me, Ken, if I'm wrong, but you have in 2019 you had 50 deals in. Ken is still here. I don't see him anymore.
Ken is not here. I think he's refreshing.
Okay. Okay, no problem. We'll be back. So I had 61 deals in 2019 for Axel, 50 for Paladin, and 60 for Bessemer. And I wanted to know today, in your opinion, which companies are sparking investors' interests and the kind of startup that are not? And can you take some example in your portfolio and explain to the audience why it's interesting for you and why you invested in? Alexander?
I'm probably not the best person to start the cybersecurity conversation because we don't actually have an investment in cybersecurity startups. We're looking for one. Therefore, in this particular case, I think it would be Alain or Ken who are better positioned to answer what sparks our interest. As I said, that we are quite focused on the blockchain technology. What we are looking, we do understand that this as a technology is quite a transformative one. Therefore, we would be quite interested to look at focused on the security of the digital assets. But for the other trends, I think Allah probably would be a better speaker. You're on mute, Alain.
Alain, you're on mute.
You are still on mute.
Yes, okay. Okay.
Yes, so let's take a good example, something that thrills us. So cybersecurity is not that a big market for a generalist VC. So when you are a generalist VC, you have plenty of markets that are as big as cybersecurity. So if you look at cybersecurity, there are a number of things that are interesting and a number of copycats. And what we look for are companies that are different. For sure, there is competition. Most of those companies, there are almost no company coming on a ground where there is nobody, because there would be no problem. Cybersecurity is about solving problems mainly. This is what I think. And we found a company that was very interesting. The name is Passbolt. It's a password manager for DevOps. So, you know, there are a number of password managers, but DevOps are guys who code, who develop applications. And those guys are crazy guys that do love open source solutions. They develop their own solution for many reasons. And we thought that it would be good to back these companies that develops a solution for DevOps based on an open source solution. So with open source approaches so that it can be audited. So for security, open source is great, just because people can just verify that there is no leak, there is no way to send the data to somebody else. So people do like that, and DevOps do like that. So we back this company that has started with an open source project and decided to develop on the top of that a SaaS product, providing a number of features that are super interesting and that facilitate the life of DevOps teams. So what I like with this is that this company based in Luxembourg is able to address, I think it's something like 60 countries today. So they have clients in many countries, which is awesome for a company. So it's purely digital, so they can address and sell to clients, and they are able to develop very well. So they are approaching 100,000 users, people that do use e-password managers, and things are going quite well. So there is no reason for this company not to be able to extend even more. It's one of the very few companies based in Europe dealing with passwords, so it gives them a huge advantage in Europe, because you know that a number of corporates don't want don't want to be in the hands of companies, especially with securities that are located in the USA, for example, or in Israel. So it's really very interesting. So what thrilled us is the ability to go global from day one. Since day one. So day one, they started to have users everywhere in the world. So this is what we like a lot.
And at a higher level, would you say you would focus more on technology processes in the cybersecurity sector?
Yeah. So we have so for sure there are trends. Let me just give you one trend of cybersecurity, one small market, which is GDPR. So due to regulatory changes, there are a number of startups came with solutions about protecting data from private users. So it is one of the things that the trends that we have seen. But for on our side, we are more thrilled by the models, the business models of companies. And what I personally love, in ways, there is a Trojan horse. So when a company sells something, but there is a hidden project behind that. So by selling, they address something, but they have a big plan behind that. So it's a kind of two-step approaches. Sometimes, you know, you see companies that gives a service for free, and one day you discover that people pay for something else. Just to give you one example of such a situation, I remember when Google started. Google, people thought, oh great, they give a free service, and they were charging companies for a private search engine at that time. So we thought that it's going to be a good company, but with a free service, how will they make money? And we discover much later, a few years later, that they had developed a fantastic strategy to manage advertising with a kind of auction approach. People that pay more are placed ahead of the others. So it was a big innovation, but it was a kind of Trojan horse that we saw. So I love that kind of situation.
Thank you very much. Ken, did you get the question, or you were already out? Ken, you're on mute. He doesn't hear me, I guess. Yannick,
Yes, I
can
think
you
so.
continue?
I can continue, but Ken, if you can hear me, can you jump in? Nope.
Ken, can you hear us? Can you unmute yourself?
No, I guess, yes, I guess he's, yeah. There is a problem of connection. Yannick, you continue?
Yeah, happy. We have a slightly, we have a very mangrove-like look at the space. So the starting point is the following, I think, and the big data point regarding this industry is that since March, we've seen 70 to 80% increase in attacks for corporates, but also individuals and SMEs. And we back along the entire value chain, so individual level, SME level, and the corporate level. So enterprise solutions for pre and post, let's say, threat detection. And I think that what gets us excited right now is that as all businesses are going online, especially SMEs, they don't really have solutions or user-friendly solutions to protect themselves online. So after a company which is like a professional, SOC as a service in Israel. And another trend we're going after is everything that's individual security online. So you all get, I'm sure all of us get like, tons of phishing attacks every day. So how can we make sure that I'm secure online? And it's a very broad definition. This goes from, bullying, sexual harassment on social media to all kinds of attacks we see. And we just see that space exploding over the last month. So that's something we're very excited about.
Mention one company. You mentioned one, but I missed the name. I'm sorry. Can you please repeat?
Yeah, so we backed one company in the SME space, which is called Cyberhead. It's doing relatively well, which is a SOC as a service offering. So that's number one. And then in the individual space, it's a company called Light, and that's essentially it's an API that is being sold to large social media, social networks, and all kinds of companies that manage relationships between individuals, and the API detects essentially abusive language, such as sexual harassment, mobbing, and so on communication channels. And that's obviously, if you follow the news a bit, it's a space that's growing last month.
Thank you, Yannick. Can you hear us? Yes?
Yes, I can.
Excellent. Did you get my question? Did you get my question, or do you want me to repeat?
If you could repeat, I think we're talking about maybe some specific areas that we're all interested in and focused on.
Yeah, considering that Paladin is really focused on cyber, it's really important that you answer this. So it's to really understand what you're most excited about in cyber. And looking at your portfolio, you have plenty of different type of companies. Can you mention some of them and explain to us why it really represents a great investment, and yes, provide us some more details about these.
Great. Yeah, let me talk about a few of the areas that we're really focused on, and then, as you say, maybe a company or two within each area that's an example. So one of the areas that is really interesting to us is cyber e-learning. So there's a massive cybersecurity skills gap, and we think that's going to get nothing but worse over time, unfortunately. So. And I think that covers a number of different areas. That could be, your IT professionals, so folks that are managing your systems and their security skills. Could be application developers that are building new applications, so they need to have security skills and need to have security in mind as they do their job. It could be the broad employee, so just broad cybersecurity awareness. Our thesis is that companies could have the best cybersecurity technologies and systems in place, but if their people aren't well trained and the people are doing things that are not safe, then the organization is not safe, and that proves out in the stats that most of the breaches and issues that organizations have are start with people doing the wrong things or things that they shouldn't be doing. So a couple companies that we've invested in and around that space. One of our first was a company called PhishMe in the anti-phishing space. So they had kind of a two-pronged approach. One is that they had a filter that helped you kind of identify, weed out some of the obvious phishing emails, but you don't want to weed everything out. So you have to, at the end of the day, rely on people, and they had a training capability to their technology that helped train the employees so that they were better aware of what's a phishing email, what's not. So if they do identify a phishing email, they don't click on it, and they alert the right people within the organization. So that was a very successful one, very early company in that anti-phishing space, and we sold them a couple of years ago. It was a very nice exit for us. Another company that we invested in more recently is a company called Rangeforce. They're out of Estonia, and they're helping train the IT security groups within organizations. So they have a number of automated modules and various types of e-learning sections that they've put together that train a wide range of IT security and IT professionals. So that's a really large and growing area. We're excited about that area. Another area we're really excited about is cloud security. So as more and more information data goes onto the cloud, obviously that data is potentially exposed. There lots of different interactions with that data. So we've been investing pretty heavily in and around cloud security. We had one of our companies, a company called Cloud Conformity, was purchased last year by Trend Micro. That was a nice exit for us. It's a really dynamic space. Application security, I mentioned application developers. So organizations broadly are developing applications much more rapidly than they ever have for a wide range of purposes. To interact with their customers, with their partners, to do different things internally. And most developers are great developers, but they're not trained in security. And so as they develop and code those applications, they often don't have security in mind. So one of the we've invested actually in now a couple of companies in and around that space. One is a company called Secure Code Warrior. That's almost like a spell check. So as developers code, they if they are not following the company's security policies and parameters, then it automatically kind of pops up and flags it, and then helps them adjust the code such that they stay within those parameters. So the application, the application doesn't get done, and then you find the flaws afterward. You try to identify as many of those flaws as you're actually coding. And then even further to the left, so even before that, we just recently invested in a company called Erius Risk that is doing helping companies as they design new applications, helping them put together plans, schematics around the code, such that the security is baked in, so that even before those developers start coding, they've got a plan in place that takes into account all of the various different potential security issues that could come up as they're putting those applications together. So that's another really interesting area that we're spending a lot of time in and around.
Thank you very much, Ken. Yannick?
So then can I this?
Yes.
Because I think you touched base kind of something super important, is that there are tons of technology solutions out there, but right now, there's a lack of training in this space regarding cybersecurity in general, but also specific, right? What is the solution? Is like they all have a massive service layer on top, to be able to be secure online. Corporates can pay for that; they can deal with it. But if you go to SMEs, these companies just don't have the abilities. And right now, when you talk to any the best people in the space, and I have one of the Israeli superstars in the space yesterday on the phone, they were like, "Wait, there is no solution. Man, you still need to have some experts doing this. All the VCs want to have products only. And it's I think it's a very exciting space how the industry would cope with that challenge in the coming years, and how will we figure out, to make SMEs safe online. I don't have an answer, so if any of the entrepreneurs has an answer, I'm sure all of us are very interested in that.
Thank you, Yannick. We are almost close to the end, unfortunately, so I will ask a last question. I guess now that everyone in the audience knows who you are and what you're investing in, and in particular in cyber. What would be interesting now to understand is the way you, as VC, you support the companies you invest in. And, like in a couple, life of a company has ups and downs. And could you take a company in your portfolio which had a very specific tough time and explain to us what the problem was and the way you, as VC, handled the situation, the way you supported the company?
Yeah. Can I take this one, Solen?
Please do.
Super. It's like, and it's related to a no-go that I wanted to mention before. So essentially, there are two things we do as VCs and that we commit to, at least us at Mangrove, are like, help you set the strategy, help you fundraise. And then all the to recruit actively for you. We help, but it's not what we commit to specifically. And all the other aspects, I really define relationship is like a WhatsApp relationship, right? So we're all the time in touch with the founders. You need to build a strong bond with them. And so this is related to a no-go, because if you're not able to build that relationship, and I think Alain mentioned that in the beginning, during the fundraising process and during the deal closing, there's something missing. Because that relationship, and managing that relationship during the entire cycle of the firm with the VCs is extremely important. And I think many founders underestimate it. To the second point, what were situations recently that you went through with company where you helped them? And I think, we had two big moments in the last year. The first one was WeWork crisis. I call it the WeWork moment, where consumer companies got a big hit because investors became more conservative. And the second moment was COVID, right? So at least in the beginning, you had just at the early stage for follow-on funding was a bit, everybody wanted to see revenues and recurring revenues, which is a little bit stupid, but that's kind of how the industry was and still is a bit thinking. So what happened? How can you support founders? We had many founders who, had their old model, raise tons of users, revenues we do post Series A or post Series A/B round, and so you had to help. I think what I call myself as a chief psychologist is like help them make their transition fast and get through that period, and very quickly decide as a VC which companies are the ones that you want to back, through that period, the 3, 6, 12, 18 months, depending on the business. And so I think as a VC, you just need to be there for them in these moments and be extremely clear during these periods. That's the most recent examples I have in mind.
Thank you, Yannick. Alain, you can take. You're on mute.
Yes, I will give you an example of something I lived a number of years ago. It's about supporting entrepreneurs. So first, I would say that the most important thing as an investor and a board member is to support the entrepreneur, not to go to the board meetings just to see and asking about what are the results, and you didn't do the plan and you didn't achieve what you expected to do. And we are here to support them. It's tough to be an entrepreneur, and entrepreneurs need VC that are not cool with them, but do support them. I will give you an example. Supporting an entrepreneur also happened when the entrepreneur himself that you like is not supported by his team. So I lived a putsch in a company, a putsch. So the entire team came to me and said, it's him or us. The entrepreneur or us, we leave or he leaves because it cannot work anymore this way. So I supported the founder in that case. So when there is a putsch, first, you have to fire the putschist. So remember that, because either they are right. So if you don't fire them, they will know that can do a number of putschists one after the other. And if they are wrong, you have to fire them. So in any case, putschists are fired in a company. This is the first thing. So supporting this company, the company went through very difficult times. Most of the team left, and we have to rebuild an entire company, and we had to support the company at that stage. The company was almost bankrupt. And I remember discussion about, do we file from bank now, or do we fund the additional money? So one of the things that you need to understand between VC and entrepreneurs, as long as the company is not sustainable alone, the discussion about funding are going to be super tough with VCs, with your investors. So on our side, I would say, not on our side, but I would say that supporting the company is supporting mentally. So make sure that the entrepreneur is happy. Is never happy because it's tough, but you don't make his life more complicated than if you were not here first, and second, make sure that so the company has enough, is not underfunded. So it's a big problem with most of the companies that are underfunded. So it means that supporting a company, you as a VC, you have to support companies you can support. If projects are too big, and if you are too small investors, you will never be able to support companies. So this is one of the most important things, is to find deals that have our size. I understand Yannick saying that it's important to see companies that can make the funds that can be very big, but sometimes we cannot afford funding those companies because it's too ambitious for us. So it's also something that entrepreneurs need to understand. And when I think it is Yannick who told us that I'm sorry, it's Yannick or Ken, I don't remember, who told us that entrepreneurs need to search, and it was Ken, and try to understand what are the characteristics of the VCs they are talking to, is also to make sure that it fits with the size and the ambition so that we can support and bring value to the company. It's not too big for us.
Alain, we have, I guess, 8 minutes left, Alexander and Ken. So can you do it? Can you answer quickly?
I can do quite quickly. We all agree that the biggest reason to invest is the team. And obviously the biggest issue that may happen and the riskiest issue is the fractures of the team. We invested once in a company in Russia. It's an Uber-style courier delivery service. It was the founder that we worked with in a previous venture who brought his the person he started with, and they split. They split about 1.5 years into the venture, and they basically couldn't work together with one another for a number of reasons. So the biggest issue for us was to try to see that the company survives, that there is an amicable departure of one of the founders, and that economically the company and we do not suffer. I think it was also mentioned by Yannick about the WhatsApp culture. You know, half of the time you are a psychologist or kind of a person who you know, the founder can speak to. It was very important to speak to both of the founders to explain the situation, to explain the reasoning, etc., etc. The result is the company is still active, and I think in this time it's you know, it will grow and it will continue to grow. We actually backed the founder who left. He returned even the vested shares by basically providing his goodwill, and he is now the founder of the second biggest Russian telemedical service. So we managed to stay in good relationship with both of the founders. The company survived economically, the fund and the remaining founder did not suffer. And the person who left actually received our support and is now doing, as you can imagine, phenomenally well.
Thank you, Alexander. Ken?
Yeah, sure. I'll be brief. Yeah, I think I would agree with what everyone's saying. I think you know, in terms of support of the companies, you know, look, just having a good regular dialogue, making sure that you know, we're being as helpful as we can. You know, we typically have board seats in our companies. You know, when I'm involved, I try to have at least weekly and usually a number of times a week interactions with the CEOs and senior managements of the companies we invest in, just so not only I'm aware of what's going on, but I can you know, identify how we can be helpful, what we can be doing. 100% agree with the comments that you know, that it doesn't work for a venture firm to just be there asking questions and demanding things of the company. They really have to be almost part of the team. While you're obviously not there day to day, and you're not formally part of the management, it's you know, I almost feel like an extended part, and so you know, that for us, that's a big part of what we do. Even before we invest, we put together what we call a big value add plan. It's part of our investment you know, thesis and upfront materials, and that's obviously a dynamic that changes over time. But we try to identify with the company, you know, what we can do to, to support them and help them scale over time. So that's a big piece. In terms of an example of a crisis or a situation, I think team obviously is a big issue, and one example I'll bring up, and I think this probably happens often, is a company we invested in recently. The CEO founder who was great technically in terms of the product and product content, and was fantastic in and around the technology, but got to a point fairly quickly, a year and a half after we invested, where it was pretty obvious that from a sales, marketing, scale of the team perspective, he just didn't have the skills or the capabilities to take the company to the next level. And it was a situation where he felt very like it was his company, his baby, and didn't necessarily want to give that up. And it wasn't him that identified that issue. It was us, a couple of other investors in the business. And so, that was, as I say, probably something that happens on a fairly regular basis. Oftentimes you see CEO founders, that hit a point where you need to bring someone else in. And so it was a process that we had to go through. It was a combination of us investors that sat down with the CEO and said, hey, look, we think we need to make a change. And those were not easy conversations. We thankfully, the initial reaction was not positive, but as the CEO thought about it and gave it time, realized that probably was the best move, and we found a spot, made him the CTO of the business, and then brought in a new CEO, and that ended up being definitely the right move, and the company's now on a really good trajectory. And in fact, I think that CEO founder, who's now CTO founder, is much happier and much in a much better spot, feels much more comfortable with where he is. As I say, I think that kind of situation will happen a lot. It's obviously always easier if that CEO founder approaches us first and realizes it themselves, but oftentimes they don't, and you have to have those tough conversations. And in the case I just brought up, it's worked out well, but sometimes that can be certainly be a sticking issue.
Thank you very much. I guess we have, Luis, you correct me, but I think we don't have time for Q&A session because it's closing in 1 minute. So I would like to thank you all of you for all your insightful feedback. If I could, I would bring you some flowers. I'm sure that the audience enjoyed this panel, and I hope they will get in touch with you via LinkedIn. What is your favorite channel? LinkedIn or Twitter? Yannick, your Twitter.
I say my blog, so yannickoswald.com.
Okay. Alain? Alain is on mute.
You're muted.
LinkedIn is good for me. It's Ken.
LinkedIn as well for me.
And Alexander?
LinkedIn is fine.
Okay. Thank you very much to all of you. Luis, we don't hear you. Luis? Okay.
Now you're there.
Okay. It's okay. Is it closed, or do we have time for a Q&A session? We're supposed to read on mouse.
I cannot hear him. Okay. Can you hear me? Can you hear me?
Yes, we hear you. Yes,
Okay.
yes.
So Luis said that maybe we have time for 1-2 questions, and then the networking tool will be open if you want to network with startups until 11:45.
Okay. Okay. So the question should be pushed in the chat. Is it correct?
Yes.
Okay. Do you hear Luis? Or I'm the only one not hearing Luis?
I don't hear him.
Okay.
Yes, if there is any question, you can post in the chat, or if someone wants to share audio and video, I can put him in the panel as well to ask his question. If not, Pascal can close this session, and you can move to the networking tool to interact with startups or between you. It's a random tool, so you will see different people. Pascal, would you like to say something?
Hello. Yes, thank you for. I just wanted to say a few thanks to close this first cybersecurity startup pathway initiative. Thank you to all the participants. Thank you to the startups, the investors. Thank you to the jury members. Thank you to all the other helping hands that were in the background to make sure that this event, this first initiative, is a success. Just I have to say, the idea behind is really to bridge the local ecosystem with international players, with be it investors, be it innovators, be it other, I would say, key relevant actors in cybersecurity, and to make sure that the Luxembourg cybersecurity ecosystem is really developing, it's maturing, it's also innovating continuously, and getting to the, I would say, to the next level, and being in a good competitive frame on the international plan. Congratulations to the two startups that we selected yesterday, that will continue the journey on the European level, as you know, and further throughout the next days and next week. Cybersecurity continues to be an important topic. You know that this Cybersecurity Startup Pathway is part of the Cybersecurity Week Luxembourg, which ends next Thursday. So thank you for all of you that participate to other of the ongoing activities of the different events that will happen, and really make the Luxembourg cybersecurity ecosystem a key differentiator for Luxembourg. I'm confident that the adventure will continue, that we will have a 2021 edition of this Cybersecurity Startup Pathway, and looking forward to continue the collaboration with all of you. And again, thank you to all that made this happen. Thank you.
Thank you very much, Pascal. I hope you can now hear me.
Yes, we can.
Yes, well, not always the blame is on the technology. I had my headset muted for some reason. I just also wanted to share that the session of today was recorded and will be available on our YouTube channel in a couple of days. So those who could not join or just arrived in the middle of the session can join at any point. So then on to you if there are questions, or if you want to raise a further question. Otherwise, we can move to the networking, and I invite you to try the tool. It's very funny because you can actually launch a random networking and you don't know who you're going to speak with.
I guess that's okay for me. We have deep dived in many different areas. That was very interesting. Thank you very much to all of you, and thank you for the preparation.